Low Warriors, are you ready? How you doing, Simon? I'm fine. Bran, hail to you for being here every day. Takes discipline to stick with it and show up. Kman, AJ, Ryan, team, Patrick Bulger. How's everyone doing?
Morning,
Big,
Dale.
big
Morning,
week
Dale.
ahead. Hey, guys, before we get to currencies, I just want to show one thing, and it's what NVIDIA did last week. Okay, so we had let me put the daily up. This is really classic market action that doesn't want anyone to succeed in the instrument. So we had this head and shoulders top, false breakdown, and then we rallied all the way to make new highs prior to earnings by a few bucks. There was divergence on multiple time frames, and I think the thing people didn't like about their earnings was the ban on China. That we can't sell these chips. Maybe that's why Xi was here, and maybe we will. But that's a pretty ugly weekly candle. It's an outside week down, and I think it's a warning that this tremendous rally that we've had that caught probably even bulls by surprise is going to relent and correct this recent pop. So that's what I'm looking for. I think NVIDIA is the key. And I would expect if it's as deep as, say, 42.50 or so, that there should be at least temporary dollar buying. So that's what I'm looking for here. I still think that, I wouldn't reach for euros up here at this level and just be patient and wait for, between 108 and 107. And I think the catalyst might be a little risk off coming in here. I don't know if it's going to be yields, but why don't we start with you, Ryan? Good morning. How are you?
Morning, mate. I'm good, thanks. You?
Good. 100% recovery.
Good, good. Have a good long weekend.
Yeah. Good long weekend. Went to Palm Desert to see my sister and nephew. It was, I actually got out of the house. There was a news story that Dale Pinkert left his house. It was on CNN. Then it was so rare there were camera crews following me around. So anyway, I feel more secure now. I'm back at home.
I can imagine them doing one of those helicopter reports following your
Yeah,
car down the freeway.
I'm like the Howard Hughes of Menifee. So anyway, what are you thinking here, Ryan? Can you chase dollar weakness, fade it, or observe?
I think we're at that observe level. I mean, you got euro dollar there. It's nudging up the highs. It can't quite break it. So if you want to chase it, you've got to look for the break of sort of 65, 70 up here. But keep it fairly tight, just in
Yeah.
case a quick fake out. Otherwise, you wait for a dip, but it's hard to see at the moment. We've had some pretty strong early signals from the end of month squad for strong dollar selling. So
Oh yeah.
that's for
Okay.
a lot of minds. The signals are pretty strong compared to prior months.
Okay.
So keep an eye on that. That could put a bit
So
on stocks as well if part of that rebalancing.
rebalancing of stocks as well. So are you
Yeah.
saying that we could have a correction in equities and the dollar will keep weakening?
Potentially, yeah, if the models are
Okay.
to be believed, because obviously stocks have had a decent performance this month, bonds as well. So,
Decent. Good.
it's increased the potential for rebalancing. The big one's obviously going to be the one we get end of year, but this one might be a bit spicy over the next few fixes and next couple of days.
Okay. And pound continues to outperform.
Yeah, dips
Comments?
getting bought pretty quickly.
Okay. And I'm looking for euro pound, and that looks like it put in some kind of top last week,
Yeah.
right? I mean,
Yeah.
look
And
how
it's,
many times we struggled up here at
yeah, and it's starting to
87.40.
crack down through the
Yeah,
levels now. So yeah, but the pound was stronger last week after the autumn statement and the PMIs. We're into a bit of a zone. I've got here 86.45 to 86.70. So crack through that, and we may be looking at a bit of a steeper pullback. But you never
think
know.
you think we could take out the 85 level?
We would have to
That
go
this
some to
was
do that. I think
that
we'd
this
have
was
to go
just
some.
that was just a bear market rally, and we're headed down again.
Well, it needs, as I say, it needs to. We've still got a series of higher lows there. So
Okay.
that first low, you've got where your green line is. I can't see where that comes. It comes in, yeah, around about where I've got my level, 86.5, 86.45. So if it gets under there, then things will start to look a bit more bearish.
It,
But until
it
it breaks
is
that low, the trend's still in play. But this can go on for weeks. We know what this pair's like.
okay.
Yeah, there's definitely
Looks
a bit more flavour to the quid than there has been of late.
I don't know, it kind of looks like Wile E. Coyote, just the ledge broke off. So we'll see. Kman, how are you?
Good
Good
morning,
morning.
Dale. Yeah, I'm good, my friend. Thank you. Hope you too.
Yeah. So we tried to rally last week. I think last week you and I talked about what you saw a rally up towards 150.
Yeah,
Yeah.
it's
So
it's capped just below, and now we're seeing a pretty decent selling pressure there coming in. I think it might already be end of month stuff as well. I don't really know. The dollar is on the defensive everywhere. Um, I'm more interested in seeing what's going to happen with those crosses over month end. Ryan was saying about a lot of dollar buying over month end, but I guess it's going to be, well, according to my own findings, let's put it that way. I agree with the dollar selling because we had a lot of moves in equities and bonds, and the dollar being the biggest market, it will have an impact. But I'm also interested to see what's going to happen to some euro crosses, because the euro, if you look at the equity performance there in Euroland and also the bond market, differentials are not really supporting too much further euro appreciation. So I reckon we may see some of those euro crosses come off towards the end of the month as well. Anyway, I'm positioned in that way. Yeah, I think Aussie, Sterling, Kiwi, Canada. Canada perhaps less, but Swiss franc as well is one of the candidates to outperform the end of the month. That's my findings anyway.
yeah, I think Canada was your highest conviction trade late last week.
Yeah, I thought we could have a decent test of that mid 136, and that's what happened. But I think the sterling is looking pretty strong. That one could put in a performance towards the end of the month as well, and then we'll see, because again, based on differentials, I have trouble to see the euro move much further. Besides those end of month flows, possibly, but based on differentials, it should not really move that much further. So if we get a spike on
So
the euro dollar into Thursday, I'm really going to look for the other side, perhaps.
okay, so you're saying the interest rate differentials, although our yields have dropped, so have European yields,
They have
and
dropped in the same way.
oh, right, and so there ever an interest rate differential advantage to the dollar um, if they both
Yeah,
fall in percentage terms?
yeah,
If
but
they
then
both,
that's the thing. What what I always come back to is that the US is the biggest market, and so it will always have more effect on the dollar. For instance, if your DAX goes, for instance, at the same speed as your S&P, which it roughly did over the course of the month. The US is still going to be the bigger market, and so you will see an influence. But then once those rebalancing flows are done, then you look at the differentials, and well, in my book at least, it says that those differentials haven't moved that much. So actually not at all. And that tells me that perhaps this euro move could stretch into the end of the month, but then we'll need to have a look at it.
So I know we had had a good auction last week. I believe it was 20-year paper, but to me it looks like this part of the bottoming process has completed or is near to completed, and I'd wait for pullbacks towards 86 or so to get long bonds again. You have a view on yields? You think that, even the 10-year, which is
it's stabilizing, right? I mean, the whole curve is relatively stabilizing. Okay, the long end, as you were showing there, the long end
took it harder Friday.
It did okay. So the yields there have come back a little bit. But if you look at the anything in the belly or so, they're they came back, but not as much. So yeah, I think you may be right there. We may have gone far enough for this round, and then see a bit of correction, which would be interesting when we start December. If the whole market corrects a little bit, then they should put a bit under the dollar. Well,
that's kind of what I'm looking for.
Yeah.
So I don't know if it starts today, but that's. So being patient and picking your spots. I mean, I'm assuming you're as lightly positioned as you usually are when, we're in this zone month end, and there's conflicting things going on.
Well, I have, let's say, I've got a bit of Aussie since last week, long Aussie dollar, because I think it may be an outperformer, but then I'm rather short some euro crosses.
Okay. All right, Blake. The team has laid it out there. Well, what are you thinking going into this week?
Well, hey, good morning, Coach. I hope you had a great Thanksgiving weekend.
I did, man.
All right. Well, as I was saying in the week ahead video, the title was, dollar weakness is expected into month end, and it is kind of weird as the markets are, all the economists, or analysts are expecting some dollar outflows, or equity market outflows, but they're also expecting some dollar weakness. So, and you can see the euro's just pushed up against a really key level of resistance. And I don't know if you have it on your chart there, Dale, but the 109.60 is the 618 retracement on the euro dollar of this of the entire move down. And we're talking from, the move from July of this year all the way to the lows of this year. Yeah. So we're at the 618 retracement. So pretty key level of retracement that we're probing into. So, and the euro's just, nudged up against there. And I think people are expecting that it might actually break. So, listening to Ryan and Kman and their commentary as well. Kman, I have to agree that the Aussie looks really bullish. We do have Australian retail sales, and Michelle Bullock is speaking in Asia for Tuesday morning. So, obviously later today, but they still look really, quite constructive here, and stocks, they're not pulling back, Dale. That's the craziest thing, is the stock market is just maintaining gains. And it looks like the S&P is going to trade up to 4,600 to be frank here. So, yeah. Anyway,
I don't think so.
You don't think so?
No.
All right. Well, let me ask you this: what's stopping it? I mean, that's the thing.
I was gonna show you, but
you were okay. Here, let me go ahead and take it back. Go ahead.
It was the opening of the show. stumble in leadership, and that would be one of the Magnificent Seven, right? So
oh,
this
the
is
NVIDIA. Yeah,
yeah.
the
I
NVIDIA.
mean,
But
that's not good action for a darling that reported earnings. I mean, usually it's up $30 after earnings. So, this may make the market take another little look and where the markets have come. I mean, even if Apple is good, and it could be, I mean, you saw this breakout. You said this isn't bearish. You were right. But why can't we pull back to 180,
well,
178?
so that's the thing about the markets is it in years past, Dale, and we can have this conversation because I think it's a good one. Is when the market starts taking out the generals, that's usually the scary thing. But what we've seen this year is we've seen just rotation. So as the markets rotate out of let's just say NVIDIA, they'll push into maybe back into Apple, maybe into Microsoft, which is hitting new highs because the whole AI phenomenon has kind of taken on its own life in this market. So
80% to 90% of the gains are in those seven stocks. S&P equal weighted index is lower on the year. So it's there really hasn't been that much rotation. It's been a continuing pile in to concentrated names.
Yeah.
So if one of them is showing a chink in its armor, it makes me pay attention.
Yeah, and look, I've long since and you can listen to the last 2 week ahead videos. I expect that this triangle is going to hold, but the upper end of this triangle still comes in around the 4,600 level.
Yeah, it could.
And I guess the point is that I'm trying to make here is the pullbacks have been very minor. We haven't seen very many pullbacks. Now maybe the end of month spices some things up. But this grind, you can see that ever since we made that low following that treasury, it started with it started with the BOJ and then not adjusting, not doing as much as we thought they were going to do, and then the treasury, shifting, purchases, and then the Fed that same week. I mean, we've seen what is that a rally? I mean, percentage wise,
11%.
11% higher. I mean, and straight up, and there hasn't been any pullbacks really. Right. So, is maybe the end of the month, maybe you get some profit taking here. I don't know. That's why maybe some global outflows is in store, but I don't know. I mean, markets still look pretty bullish. We found support overnight in Europe at channel support. And that's why, when this update here, and I think it's important, let's see, right. Let me
buy it for a rally to 46 and get out and reverse out up there.
Well, that's the thing is, as long as we don't break that low, and but if we do break that low, and we break through there, that channel support, that is going to be bearish. And that would be taking out the overnight lows that we saw in futures in European trade.
Hey, so I'm the boy who cried wolf anyway, right? So market will be okay.
market will be all right. Well, here's the thing, and I have to say this because there's so much. Like I listen to a lot of economists on and one of the things when I'm doing my analysis every evening, it's about 2 hours of going through the analysis on ForexAnalytix and uploading this in the evening, and I go through all 30 instruments and write it all out and whatnot. And while I'm doing that, I'm usually listening to some podcasts or some videos from economists that are very well known in the FinTwitville, right, if you will. Everybody is obviously bearish, and it's amazing how bearish everyone is for the most part. I would say at 85, maybe 90% is just bearish risk all the time. And it has been all year. And what we've seen is, in the face of all this, we've seen equities just completely rally to new highs. And I mean, until the tone changes a little bit, I don't know. I mean, it just everybody just continues to find themselves off sides. And economists are different than necessarily traders, but it's interesting because they'll be the first ones to say they're right if we finally go into recession next year. It
boils down to the demographic. The older guys that have been around and seen a few cycles are more cautious than the 30, 40-year-old traders, because they've never seen anything. They've really never lived through a huge bearish economic cycle. So the younger guys are saying, okay, boomers, but it's different this time.
Yeah. Well, let's take a real quick look at a few of the big assets here. Now, so we'll start off with like the euro. So this is the, obviously we're sitting up here against, this big 618 retracement, and I'm long dollars and I'm not happy about it. Let me just put it that way. I mean, for the most part, I'm short some dollars, and like dollar yen, I've been short now, getting short as we're below 150, but the euro, we're just sitting right up against this key resistance. And I feel that the euro has the risk of punching above that resistance at some point. But, going back to what Kman was saying, yeah, I mean, look at the Aussie. We're challenging levels we haven't seen since back here in August. And this is the 50% retracement, previous support. It's all as, around this resistance area that we're knocking our head up against. The Kiwi trying to punch higher above its 50% retracement as well. You take the dollar CAD's actually holding up a little bit better than expected, but the dollar CAD came under pressure on Friday, and it really, kind of broke down, but did a little bit of a false breakdown, but you can see we're below, channel support. So you look at these commodity currencies and they all look, fairly strong at the moment. The dollar yen, it is struggling ever since we broke through this channel, and you can see having a hard time getting above 150, and it's starting to weigh on some of the yen pairs too. If you look at all the other yen pairs, like the euro yen's not making higher highs, which is interesting because the euro yen was really looking like it was going to go into a parabolic mode. But we're not making higher highs here. Divergent relative strength, as you can see on the dailies. Sterling yen's pressed up against highs. Aussie yen and New Zealand yen are also trying to make lower highs, and the Canadian yen, is just it is struggling up against this resistance, and it has been for literally months. Now I want to go back and talk to Ryan and Kman here really quick. So what are you guys sensing here with the yen? And do you think that the yen might actually start strengthening here without any formidable action from the BOJ? What are your thoughts, Ryan?
I think there's several things going on. Obviously, you've got the Bank of Japan. I don't think that's really going to kick in till next year, till the early part of next year.
Yeah.
But you're looking at the thing, like the Aussie and Kiwi. We're seeing, commodities like gold rallying. That's had a break up through the resistance. I was saying last week it looked like it was going to blow, and blow it has. But it's not a one-way story for all commodities. You look at oil, that's looking very sorry for itself. So you've got to be thinking, why is Canada gaining so much while oil's in a slump? That was a big outsized move on Friday. So there's several different things pulling and pushing that don't quite line up. Copper there as well. It's that's not looking altogether great when it should be. So you've got several drivers coming in, but for yen pairs, you've got two sides. You've got what's going on in dollar yen and what's going on in dollar generally. So that's weighing. So that gives Aussie, Kiwi, the likes a lift. And it could just be that rather than we're seeing much happening in the yen, it's just the Aussie, Kiwi, and the others pulling, yen pairs higher with it. But I think it's going to be the path of most resistance doing that in the yen pairs rather than versus dollar, because we've got this stuff going on with the BOJ. So I don't think we're going to see rips in yen pairs unless their respective majors start really taking off. Because even with this break in the Aussie and Kiwi, it's still looking a bit huffy and puffy. When you look at like cable, euro, dollar, they've all gone through their 50 fibs and they're testing their 61.8 fibs. But when you look at Kiwi and Aussie, they're just, they are a bit laggard. So yeah, I don't know if it's going to be a quick blow through or a bit of a grind.
What do you think in Kman with these yen pairs? Do you think that the yen is actually going to be able to make a move without the BOJ?
It is possible if risk starts to falter as well, I think. But for the time being, it's rather a dollar move, right? And I'm actually thinking a bit the opposite. We spoke about it on the flow show. Is that the yen crosses? I find them coming back towards their prior highs very easily, despite the dollar yen struggling to go over 150. But again, we are entering month-end territory, and it's always a bit dangerous to really think that something is going to take a trend or start a trend right here and now. It's possible, of course, but I'd love to see where we are come Thursday. Yeah, I'm just I'm struggling because dollar yen looks really topping out, but those yen crosses, as I say, if you look at those things like Kiwi yen and Aussie yen and sterling yen, for instance, they're coming back relatively easy to those prior highs. So yeah, you can argue that they don't make fresh highs, but on the other hand, it was not really meant to make. They were not really meant to make fresh highs. If the yen needs to recover, it will have to recover versus everything.
Yeah. All right. Well, yeah, it's gonna. I wonder if we're gonna get any type of commentary coming out of the BOJ or Ministry of Finance. So anyway, it should be for an interesting watch. The other thing I wanted to point out, you were talking a little bit about the Aussie. One of the things that I mentioned on the week ahead video, and I wanted to point this out, that this is the actual chart that I used for the week ahead video, was in copper, because in order for me to be really constructive on copper, I wanted to see, or excuse me, on the Aussie, I wanted to see copper break that 618 retracement, that 200 DMA, that trend line. And you can see we're just kind of struggling here. It's hard for me to be long Aussie dollars if copper's not going to participate, and it's a correlation that kind of has stuck with me over the decades of trading currencies, and it doesn't make it right. It's one of those correlations that I really have a hard time not implementing. So knowing also that copper actually hit the 200-day moving average pretty much when the Aussie did. I mean, we both hit that, but you can see how the Aussie's lifting and copper's not, and that's the thing that's kind of freaking me out right now. But it is something that I think maybe copper can make the turn. Copper could be up 3% in a day and not bat an eye either. So you have to keep an eye on that, especially with the Aussie as firm as it is. Maybe copper does an about face and actually really starts to move. So
Dr. Copper looks like he's taking Geritol for his iron poor blood.
Yeah, maybe he is. We don't have any U.S. data today that's really coming out here in a second. I'm sorry, and I should have clarified that. We do have new home sales out a little bit later today. But as far as economic data goes, that's coming out during this show. But tomorrow, I guess tomorrow isn't either. No, was it Wednesday? Yeah, I guess Wednesday. I thought GDP was tomorrow, but preliminary GDP is actually on Wednesday, which we'll be covering here live. But today, just keep an eye on the equity markets, guys. They sit here and they're holding up against their highs. yeah, if Dale said it, you know, if we're going to challenge 4,600, maybe today's the day, as long as we're above this channel support. So keep an eye on the markets. I think they still look pretty constructive. And Ryan, Kman, thank you guys for being on the Flow Show. Dale, welcome back. And I know you have an interview, so I'm going to go ahead and pass it over to you all.
Well, thank you very much, Ryan, Kman, Blake. Thank you, guys.
Thanks, Coach.
Let's all have a great week. And now joined by my trading warrior brother, Peter Goodburn. Peter, how are you, bro?
Hi, Dale. I'm really good, thanks. Yeah, how are you doing over there?
It's good to see you and hear you. And I want to start off with acknowledging and validating that when the S&Ps were trading under 4,200 at 4,175 and then lower, you told your subscribers there was going to be a rally. I don't think you were looking for this type of magnitude of rally, but who was? And you know, anyway, great out down there, Peter. So
oh, thanks. It's nice to get an accolade. Yeah, I mean, I'm just sharing my screen, okay, so that you can see. Oh, hang on, have I got the wrong screen share? Okay, I've got to sort this out now. Let's stop.
Yeah, you have the S&Ps up there, buddy.
Oh, is there an S&P? Oh, good.
Yeah,
oh, okay.
Yeah. So you're looking for a pullback from here. Let me ask you this. So,
okay, good.
You know, I see this count up here, which would be new all-time highs. And did you ever think, you know, last year or even, you know, when, you know, you were bearish against 4,600, say, that we would ever see all-time highs again before we had a much larger correction? Is this a curveball?
No, I didn't think that was likely. We haven't got that in the Russell, the small cap indices, and we haven't got it for several other things, but some of these markets have persisted higher. So I didn't think that we would drop down. I always thought that minor wave 2, which we've designated as beginning the decline from, you know, the Jan 22 high up here. Yeah. I always thought that would unfold into a double zigzag pattern, and we get to lower levels, you know, at some stage below 3,500. But this persistent sort of run up from October last year, it seems that pattern, that double zigzag pattern, is changing into an expanding flat. And it happens sometimes. It can happen that way. I didn't think it would. Can I ask
you this, Peter? Someone else I talked to who used it, he's not really, you know, he doesn't even claim to be a great, you know, that waves are his number one thing. But that's what he was calling this rally up at 4602, an expanding flat. And he thinks now we have an expanding flat within the expanding flat, but not new highs. So up here, it's an expanding flat and an irregular B. Is that what this would be? An irregular took out this high?
Yeah, I mean, if we take a look at the bigger picture, we sort of we have something like this going on, where we break that high up here slightly, just very slightly. This is the old 22 high. Yeah, right. So we break up slightly, and then bang, we're going to come down really hard.
Okay.
And
how much time do you think the market has left to give us a pullback to correct this recent advance and then make a new surge towards all-time highs? I know different people have different targets up there, some as high as 5,400. There are melt-up people saying 6,000. There are other guys saying, you know, right around, you know, 4,800. Yeah. When do you think we'll be there? New Year's or in the spring?
Well, the interesting aspect to this is that if we were moving up from the 4122 low in October as a 5-wave expanding impulse pattern, you know, when I make those terminologies, I'm talking about a 5-wave pattern that has an extended third wave, you know, so a very typical Elliott construct of a 5-wave pattern. If we did that, we would probably get up there by sort of January, and we get a sort of a welcoming sort of new year rally into the end of January, and then it would collapse from there. But from what I can see, and we'll get to know about this probably today or tomorrow, is that the upswing from 41.22 to current levels is more proportionally measured as a zigzag, which is quite interesting, because let's have a look at I'll go to my worksheets where I can show you this. This is the advance from the October low at 41.22. We've got a 5-wave advance getting into mid-month, a very tiny correction, and then another 5-wave pattern. And if I extend the first sequence by 61.8, I'm going to get a target at 46.02 today.
Oh, see, and I had a discussion with Blake, so Blake's going to get his 4,600. Okay.
Yeah, I think it's possible. It doesn't need to go there, but I think it might be that in the first hour of trading, we get a little bit there, and then suddenly you might find that it lingers there till about New York lunchtime, which is normal.
Month's end, that things don't change until next month.
And then this would then, if this zigzag is unfolding like this, then it becomes part of a diagonal impulse, not part of an expanding impulse.
Okay.
And the diagonal impulse,
yeah,
if it's a diagonal, the zigzag is obviously consistent with wave 1 of the diagonal.
Okay.
The second wave by default is normally a 76% retracement. Okay, so we're going to measure then 76 like this up to 46.02, and you'll see it's going to come in. It's going to come in around 42. Yeah, 42.30.
Right, so that's only 100 handles away from the low. What if, and you know, things change, right, Peter? What if we take out that low?
Well, I mean, if it takes out the low, then I think we could be already starting to look, which we originally thought would happen, which would be that we would start this next bigger decline. You know, if we go back to this weekly chart, then we would start this process down to 28.79. Almost certainly, if it breaks that low, you're going to start an avalanche of selling.
So there's your line in the sand, bulls.
That is the line in the sand. Yeah, that is the line in the sand. But I have to admit that one of the things which crossed my mind, and which we're talking to some of our institutional clients, is this correlation between, say, stock indices and the fixed income markets, particularly the yields, 10-year Treasury yields.
Yes.
See, at the moment, the market's pricing in about a 25% probability of a rate cut in March, in the March meeting. Suddenly, with this sort of slightly lower CPI numbers that we saw in the week before in the CPI in the US, and Jerome Powell's remarks after the Fed announcement last month, the market's basically pricing in too much of a rate cut too quickly. And we can see that in the 10-year. Have a look at the 10-year Treasury yields now. We've been up to 5% in October. Now, don't forget, this 5% number occurred pretty much at the same time that we had the 41.20 low in the S&P.
Yeah, it did.
And the S&P is moving up.
And the dollar high.
Right. So you've got the dollar going down at the same time as this is going down. The yield is going down, and you've got the inversion of that, and the S&P is moving up. Right. So what have we got there? We can confirm the correlation. If we do get the S&P dropping down for the next 2 weeks by about 8% in the short term, that's going to flip the yield up a little bit before it heads down later. But in the bigger perspective, if we pan out a little bit and we're saying, right, well, the S&P, once it gets down to 42.30, it's going to have a run up here like this.
With yields dropping towards your 360 target?
That's correct. So we get down to 368.
Okay.
We get down to 368. And then when, for whatever reason, we start to turn back up to continue primary wave 5 as a diagonal, we're then going to get the next big sell-off here.
So you're going to have ending diagonals in the 10-year yield and S&Ps. Interesting. Do you find
well, they're different. They're different dimensions. You know, they're different degrees of trend and different timing. You know, don't forget, here we're saying negative correlation. So this is coming down 42.30 at that low.
Because yields are bouncing.
Yields will bounce up a little bit, you know, up here before they drop down again. But what we're saying is that this low at 368 will coincide with this high at 49.50.
Right.
Okay. And then when this begins to collapse lower, so this third wave of the diagonal starts to work its way back up. There's no way that primary wave 5 is finished. The market is assuming that primary wave 5 is finished up here at 5%, but it's not. It hasn't. We can't get a 5-wave pattern in that subdivision, in that move from April's low up to October's high. And we can see that very evidently in the way that Europe's yields are working as well. I mean, if you aren't convinced by that, you should be by this pattern, because here's the same equivalent low in March, April, which began primary wave 5 in the bund yields here in Europe.
Right.
But you can see that there's no way that you can count 5 waves in that swing. Absolutely not. So yeah, I think these are, I'm a bit sympathetic to the idea now that the S&P will drop down here, but it will continue moving up like that. I don't think we'll break 41.22. As you've said, if it does, yeah, it would look very, very bearish. That's the line in the sand for the bulls. But otherwise, I think that there's a good chance that these two things, looking at the way that 10-year Treasury yields are working in conjunction with the S&P 500, I think this is the way it's probably going to work.
You know, someone, Blake was talking about copper, and I know you follow it.
Mm-hmm.
And I thought we were breaking down, you know, for the last 2 months. I was making jokes like, you know, Dr. Copper is being sued for malpractice by impersonating a bull market.
Well,
So, anyway, looks like he won the suit, and Copper's, this is copper. This is what you have up here right now.
This is copper. This is LME copper.
Okay.
You know, I plot the LME because, you know, my background is I've been trading on the LME since the late 70s, and also it's a continuation contract without.
Hey Peter, they were really crooks on that floor.
On the LME floor.
Oh, you always got the worst fills at the LME compared to the US.
Oh, really?
Did you know that?
Well, I was actually the guy that was actually executing those fills. So thanks very much for the accolade on that
anyway,
one.
I just wanted to let everyone know that you're
thanks,
now,
Dale.
Now you have to be right.
Thanks very much. Thanks very
You're
much
very
for
welcome.
that. I'll give you some. I'll plead my innocence for the time being and give you a long story about execution fills.
There were many at the Comex and Board of Trade too, Peter. I'm just kidding.
Yeah, I mean, yeah, we always used to think the Comex guys ripped everybody else off. Now, so we got a bit of a dialogue there coming.
All right.
Get your boxing gloves out.
Fair.
We'll sort this out.
All right.
Well, it's an interesting story with copper because, and I am sympathetic to what Blake was saying, you know, but I think overall, copper's having a bit of a hard picture in its development downwards. I'm going to show you a weekly chart, which might give a little bit more background to what should be going on here. We've got an inflation pop zigzag from the financial crisis lows. It's just off the side on the left here. Actually, I'll just bring it across a little bit. You can see that we had a low at $28.15 a ton. We had a nice 5-wave advance here, which is wave A of a zigzag, but wave C moving up from the 2016 low is taking the form not of an expanding impulse, which wave A has unfolded into. This is a diagonal. And the main reason for that, it has to be unfolding 5 waves, by the way, and it has to break above wave A's. Well, it's done that in effect already, but not in 5 waves. But this pattern is a diagonal impulse. It's an expanding diagonal. And it basically means that we're going to have this drop down to 6,000 or just below before it goes up again. We've got 3-wave activity in the first wave, 3-wave activity with a short hesitation. This short hesitation, by the way, is very typical of these zigzags in diagonals. You know, if you can remember what we looked at the beginning with the S&P, this is a very short B wave in a diagonal. Can you see that?
Yeah.
It's just like a short hesitation.
Nothing.
It's almost nothing.
And then the CPI came out, and it was a rocket ship again.
Yeah, here's another example of a short B wave within an impulse sequence of a diagonal in these ending type diagonals. We've also got one, by the way, in the S&P weekly chart. Here's a short-term hesitation for the B wave of this diagonal. You see these B waves are very, very short, and they confuse everybody because they are so short. If I extend wave A here by 61.8, you're going to get up to the top here, which is the perfect expression, Fibonacci expression of measuring that zigzag to confirm that it is what it is. But anyway, returning to copper, we've got to get this drop down to 58.70. So I think to some extent,
I think that'll coincide with the, because it's a economically sensitive commodity like WTI is, and I know you're bearish too, that they both continue to sell off while the yields continue to drop market. And then they both kind of bottom together.
Well, I think this decline on copper, which necessitates this zigzag finalization for next year, is coinciding with that big drop in the S&P. So,
okay.
So this one that's coinciding with this drop here. Once these are out the way, we're going up to new record highs, and copper is too, which is basically this one. But we've got these symbolic declines coming in this for next year on the S&P and copper. That basically is giving us an indication that we're going to see a recession. So all of this talk about soft landing and pricing in rate cuts for next year is a lot of hogwash at the moment. It's not going to happen. As soon as we start getting this rally finishing into and across New Year, and when the S&P then starts to drop down and we start getting copper dropping down, you'll get that equally priced out again. So you're going to get pricing in going into New Year, January, and then you're going to get pricing out afterwards. Okay, so we're not going to get a soft landing or no landing at all, which is what the Bank of America surveys are telling us what the fund managers are expecting at the moment. We're going to get that complete shift of sentiment once we get across New Year, the end of January. So once the January window finishes, we're going to get these prices all starting to drop down again, and suddenly we're going to be starting to sort of price out all of those rate cuts that they're currently being priced in, and we're going to start seeing more evidence of a hard landing, not a soft landing, you see. So and this is very evident in crude oil. If you take a look at the crude oil price,
you've been spot on with it. No war in the Middle East got you bullish.
No, I mean that there's been the conception since obviously Hamas invaded Israel and took their hostages, but it hasn't materialized. In fact, that happened, and then we've got this big sell-off after that anyway. There's definitely a downtrend here. We had a 5-wave development for primary wave A in 2022 and a bit of 23. There's been a nice expanding flat pattern that's corrected that 5-wave decline. We're heading down now in another 5-wave decline, and it's just a question of what degree of trend and sequence do we have to get down there. I immediately extended wave A by 61.8 to get a target of about 47.72. Let's call it $48.
Do you think that'll be around when the S&P is 2,900 as well?
Yeah, that will
down there.
Yeah, that will coincide when we're down at 2,900 here.
Okay. Yeah. Wow, there's going to be so many different things to buy. But gold won't crash with the market on that sell-off.
No,
I don't think the dollar will still be going down during that sell-off, which will be different. Won't that have a lot of people off sides saying, where's the bid on risk off in the dollar?
Yeah, the dollar now has broken 104.80, which was nearby support week before last on that CPI number. When it broke below that, there was no way it would go any higher than it had already, which was October's high at 107.35.
Right around 50%.
So we're talking about over the next several years, we're talking about the dollar index halving in value. And there's going to be a sort of de-dollarization theme, which is, what we're seeing already with Saudi Arabia agreeing swap arrangements with countries like China and India, to supply them with oil. They're moving outside of the dollar remit. They don't want to have to transact their commodities in dollars anymore. You know, there's too many fingers and too many hands into their business, and you know, the old oil agreement going back to the 70s between the United States and Saudi Arabia is basically bust. It's defunct.
The petrodollar.
And this dollar de-dollarization is going to be taken into effect over the next several years. It's going to eventually wear the dollar down. And this is a longer term chart that you're seeing here, weekly chart. In the short term, we're trying to move down in a 5-wave sequence from October. The normal place for it to rest is probably back to July's low. It might break it slightly, that would be normal, and then suddenly it flips up in a second wave, which we don't know to the extent of how deep that might be. I've got some institutional clients telling me, oh, Peter, look, we believe the dollar isn't finished with its strength, and it's going to have a deep rally before we get the sell-off, particularly if you're thinking that yields can later have another rally. Well, it might be that I've underestimated this illustration here for intermediate wave 2. And I might have underestimated wave 1 slightly. It might even break lower than this area. There's a lot that can happen yet because we haven't really got a lot to measure off from the development down so far. But
I mean, that was a pretty tiny wave 4, that bounce we had last week, Peter. If we get an S&P sell-off, don't you think there'll be any bid in the dollar? Maybe take it back towards 105, 105.50?
Well, it might do. I mean, I'm looking at it here in the very short term. You can see that we had the correction. It was a 38%. This is my worksheets. This is a 38% retracement of that decline, that 5-wave decline, which was a third. And you can see that it's almost dropping down into 3 waves at the moment. So if you were, let's put in a 60-180 extension here and measure that up. And that comes in at 103.12. So it might just, you want to be watching today and just see if that nips there. And then you might get a 5-wave development like this coming up.
Yeah, that's what I'm looking for.
Yeah, and then it would, you know, so wave 4 will end up as an expanding flat, something like that.
There's like a C wave missing.
Yeah, this would be wave A. This zigzag decline that we've measured here to 103.12 would be B. And this would be wave C coming up. And then you can extend, you know, typically you can extend 38.23% here, like this. And then you might want to see if that's hitting maybe the 38%, sorry, the
halfway.
The 50% retracement number instead of the 38 number, which contained the A wave.
Right.
Yeah, so you're going to get somewhere up to here, look, you know, somewhere in that band.
Shallow. Can you answer this question that I can't answer for people and I can't answer for myself? You know, we've had this huge run in the physical gold market, physical silver market, and I know you believe platinum's bottom and it's going to lead the way. Why are
Hey, Dale, good morning. I'm sorry, we could barely hear you. Is your microphone close to your mouth? And good morning, Peter.
Yes, good morning, Blake.
Let me see if I can make a volume.
You're just coming in really quiet, Dale.
How about now? How about now?
Now's better. Yeah.
Okay. Why the miners are underperforming the physical market. And are they on a different count because they're underperforming? Most of them.
Yes, they are. I'm pleased that they're underperforming because actually they give us a chance to buy into those.
Well, yeah,
that's a good. That's the good aspect of it, isn't it? But the question obviously needs to be answered. You're right. I mean, here's the GDX, and it's just starting to get going. I think to some extent, don't forget that bullion versus from something like the GDX miners index, we're talking about 2 different asset classes, aren't we? Which are related through their business. So to some extent, equities have been dragging this down, and we have seen in the past, of course, during the big advance in when we bottomed in 2016. The advance was much more rapid here in
Yeah.
in equities. The bullion price was lagging behind. This one really sort of went almost tripling, or 2.5 times value. Bullion did something like 40%, if I remember. This did like 250%. So you're going to get disparities there, but I think it's okay. I mean, I think at some point when the market realizes that bullion is going to break out and gold's going to break out of its triple top area, I mean, how many times has the market sort of like got it wrong and started talking about a breakout, only to find that it's actually been delayed.
Yeah.
We've had 3 tops here. Most people sort of bought heavily back in July, thinking it was going to break out, didn't it? Traded back down again. But but this time I think that would set the miners alight. I've got clients who are buying a lot of miners at the moment, mainly because they haven't moved. They should catch up. It's a good opportunity, really. As you said, I prefer things like platinum. Platinum has also been dragged down recently, but I think platinum and palladium in particularly are my hotspots. I really like the way that they performed, especially this nice expanding flat pattern in palladium, which brought out the lows. We had a target way up here at 846. We got to 838.
I remember.
It's really nice.
Call. I in my head, for some reason, I thought it was 800. I forgot, but I remember that we were down there, and that kind of kept me on the right side of things until platinum bottom. That helped me.
Good.
A lot of people are younger traders, and they don't even remember that platinum used to trade at 1,000 or better premium to gold. So would buying platinum, selling gold be a good pairs trade over the course of time?
Absolutely, it would be. Yeah, I mean, absolutely. I think we've got platinum, as you say, was generally always premium to gold.
Yeah.
In my early time of trading, in the 80s and stuff like that, and I think we got a platinum gold ratio here, and here we can see advanced gold outperformance. But going back to the 1980s here, all this period going up to the 2000s, platinum was twice as expensive as gold. Now it's half the price. So you can see the big swings in the way that these two things are working around.
Yeah. So just a mean reversion would be a big trade.
A big trade, yeah. It means that's why I think platinum is really on my radar to be buying that rather than gold. Everybody's talking about gold all the time, but here we are at a historical high for platinum. This downswing here, by the way, was the pandemic sort of situation when we started to see platinum start to revive to the upside for the first time, having been beaten down. But this ratio suggests that we're going to see platinum as a very, very big outperformer of gold.
And then silver outperforming gold as well.
Silver should as well.
We've seen that. Yeah.
Yes. Yeah.
Do you know any platinum shares that your clients buy, or I don't think there are many in the public market, are there?
Well, there's some. There's Impala and there's Impala mining, and these are South African things.
Yeah.
But you've got to have a broker that's going to allow you to trade those. If you're based in the US, you might not be able to trade them. So the best thing to do is, I know that platinum ETFs are generally mine linked, but this one's good. This is that's platinum. That's Aberdeen's platinum ETF trust. And it looks like the same as the bullion price, where you've got this expanding flat here. Look.
Yeah.
So
PPLT, is that the symbol?
Yeah, exactly. PPLT is a good one.
Okay.
There is another one, PLTM, but so you could maybe look at either of those.
Okay. Cool.
They look good. I think they're the best way to go. Actually, that's certainly the way I'm going. I'm not going to buy any individual shares. The problem with individual shares also is the fact that, you know, you've got to know what the inside leg is on their financial statements.
Yeah.
And what their
You're right.
borrowings are and how much they've hedged. You know, if they've overhedged because the banks have forced them to do that because their financing levels isn't adequate, then you get a nice big price development to the upside, but you don't actually benefit that much because they've hedged too much.
Wow. Some great takeaways from you today, Peter. Looking for a pretty good retracement of this recent explosion to the upside and rally into new highs up to 4,900. Be long metals, buy pullbacks. Dollar, it's peaked and could probably work that trend for years now. And your scenario in yields is different than most because most believe we've already hit the terminal rate at the high. So, so many pearls, Peter, I could string a necklace.
Well, let's hope
Once
they're not.
again.
Let's hope they're not synthetic pearls. They're the real deal.
We'll hope that these diamonds are not cubic zirconium, and I know they're not. And you know what, people that because I follow you, and people that are interested in doing so, best way you could show your website and
thanks, Dale.
show them around a minute.
Yeah, sure. I mean, obviously, if you have a Twitter or an X account, our handle is at @ElliottWave_WTI, and we're not so active there. If I get time, I'll put something really interesting on. I put week before last, I put this really interesting Apple Inc. Update. I think we've actually got to my targets now. I mean, it was at the time about 154. And it's already up to 192. So watch out for something big happening to the downside on Apple.
But let me ask you this while you're on it, on Apple.
Yeah.
Could Apple not? Wouldn't you think Apple would take out 192 if all we're getting is a pullback in the market and then new all-time highs, or it'll be different leadership and Apple will not make a new high on the advance after this pullback?
Yeah, I don't think Apple will make a higher high like the others. This could drop really severely now. Whilst the pullback in the S&P, this 8% drop comes in, this could drop back down to this low, get a counter trend rally whilst the S&P makes a higher high or the NASDAQ makes a higher high, and then it drops. So you're going to get underperformance there. But this pattern is very specific, this nice expanding flat from 171.
NVIDIA kind of gave a failing signal last week on earnings too. I brought up earlier in the day, Peter. I don't know if you look at it, but it's kind of the darling one, the Magnificent Seven.
I've got clients who are trading NVIDIA, and I don't like it what they're doing because they're generally these big funds are generally long all of these tech stocks, and I'm nervous about NVIDIA because I think that there's fragilities in the pattern. I think if we get this downswing, as I think we should in the S&P and the NASDAQ, similar drop here. The NASDAQ's not going to be a diagonal, by the way, but simply a fourth wave correction, which means that it's going to still unfold into three waves, but it will be, and it be the same sort of percentage decline, but it's just a different wave labeling. But if that happens, it's going to send Apple quite sharply down. If it does send NVIDIA down by a similar degree of retracement from the October rally, then I think when NVIDIA goes up next, it might break a higher high. So it will outperform like the NASDAQ to a higher high, but it might be somewhere sticking around 530, 550 as a top.
Got you.
And I think then it's going to be doing a zigzag upswing from the October low, and it might become a B wave of an expanding flat, and then it will collapse later. So 530, 550 are two barriers for NVIDIA to the upside if it was to make it that far in a zigzag from the October lows. Yeah, if you can imagine.
Bonus calls from Peter Goodburn. All right, so okay.
Yeah, I mean, if you go to wavetrack.com, which is our main website, there's a couple of ways you can follow a lot of the analysis that we talked about today with oil, fixed income, S&P, NASDAQ, even Apple that we're putting into the report. You can go to registration and go subscription here, and you can subscribe to the bi-weekly report, which is the Elliott Wave Compass report, and we've got everything in there. It's I think it's pretty well priced at $39 a month. So we're giving you 2 reports per week, and if you do go into those reports, you'll be able to log into. We'll give you a login and username, and you can log in here and see all the charts, and you can scroll them, or you can view the chart online by clicking one of the thumbnails. You can go into the view screen and see this, and then you can scroll to the next ones here, and you can download the report as well. So if you download the PDF report, you can actually store that, so you've always got that month by month. You can refer back to the forecast and see what they're doing, and yeah, so that's a great way to participate in some of the forecasts that we're doing at the moment.
Thank you, Peter. Really appreciate you coming here and sharing your hard work.
Thanks, Dale. Great to chat. Great,
Yeah,
always.
Good to see you. Check out Peter Goodburn. Should be part of your intelligence gathering. And that's going to be a wrap. You could join the team in 9 minutes on the Morning Edge. People are thanking you, Peter. And
thanks very much to everybody. Yeah, thanks too.
All right. For tuning in. And I'll see everyone. Don't just count your pips, count your blessings. And there's lots of pips to be made in 2024. So, preserve your capital. The markets will be here. And that's it, Peter. Thanks again. It was really great starting the week off with you.
Yeah, thanks, Dale. All the best to you and the team.
All right. So I'll be in touch with you, Peter.
All the best. Thanks for
all
everybody.
The best to you. And all right. See you, everybody.